setting new standards in podcast excellence. You have joined the WBT, fully focused on business and taxes. Here is your host, Michael Lodge.
And welcome to the WBT. This is Michael Lodge. I'm glad you have joined me. So, our conversation this morning is going to be about taxes and what you can do for 2019. You have a few more weeks left in 2019 that you can take some action. So let's talk about it. I'll be right back.
This is brought to you by Lodge & Co., a business and tax advisory firm where your success is our goal. Call us today toll-free at 888-681-1518 or visit us at www.lodge-co.com and learn more about what we can do for you. Lodge & Co., your source for sound business and tax services.
So 2019 went zooming by and now we're at 2020. 2020, isn't that good eyesight for next year? I am looking forward to 2020 just to see what happens. I'm looking forward to it. But for 2019, we still have some ability to make some changes and adjustments to help you on your 2019 income tax return. Now, one of the things that I have told you, and I keep telling you, is to take your last pay stub, send it over to your tax practitioner, and start looking to see if you need to make some adjustments on your W-4 for the end of year taxes. The question should be, have you taken enough out or have you put too much in? So you need to make those final year adjustments just in case so you don't owe those taxes at the end of the year, or if you paid too much into the system. So you can make those adjustments right now in December, and you only have a few more days left. So talk to your tax practitioner and start thinking about this. The other thing that you can do is, if you're getting bonuses, why don't you try deferring your bonuses? If your hard work paid off this year and you are expecting a year-end bonus, this extra money in your pocket may bump you up to another tax bracket and increase the amount of taxes you owe. Think about that, okay? If you can delay an extra income until the beginning of next year, do it. If your boss is able to pay you your bonus in January, you will still receive it close to the year end and you won't have to pay taxes on it until you're filing your 2019 tax return. Or taxes, I mean. Excuse me. I am in Palm Beach, and all of a sudden it's gotten very cold and very dry. And it's affecting my voice. And then also I would suggest that you accelerate deductions and defer income. There are a handful of tax deductions that are recognized in the year in which you pay them. For example, if you own a home, get a mortgage interest deduction, and if you make an extra mortgage payment on December 31st, you may be able to claim the additional interest paid as a tax deduction in the tax year that you paid it. This lets you take the tax deduction immediately rather than wait an additional 12 months when you do your taxes for the next year, for 2020. Before using this strategy, be aware that under the Tax Reform Act, if you purchased a new home after December 15th, 2017, you can deduct the mortgage interest you paid based on a home loan up to $750,000 instead of $1 million for homeowners who purchased before that date. The other issue is start donating to a charity. The holiday season is coming. It's right here, right now, which is a great time to clean out your closet and household goods to give to those in need. a legitimate charity. And the IRS has a list of legitimate charities on their website, on irs.gov. You can help someone in need and reap the benefits of a tax deduction for non-cash and monetary donations donated to a qualified charitable organization if you can itemize your tax deductions. Now, a lot of you can't itemize because you don't go over that threshold of the standard deduction. So you'll have to talk to your tax practitioner. I'm telling you, right now is a good time to call them and kind of get some indication of what you need to do for the remainder of 2019 to have a good tax return. If you volunteer at a qualified charitable organization, don't forget that you can also deduct your mileage, 14 cents for every mile driven for charitable service. So, talk to your accountant about that also. If you are driving your car for charitable organization, let's say if you're working for a charitable organization that helps the elderly and you're hauling elderly people to their doctor's appointments and everything, and you're not being paid for that, but you're doing it out of the kindness of your heart, and if it's a charitable, legitimate charitable organization, talk to your accountant about that. Then another issue that you can do is take a class. Taking the course to advance your career or improve your skills is also a great way to lower your taxes and boost your tax refund. Paying the next quarter's tuition by December 31st may give you a valuable tax credit up to $2,000 with a lifetime learning credit. And then also maximize your retirement. Another great way to reduce your taxable income while building your nest egg is to make a contribution to your retirement savings account. Okay? Whether you contribute to a 401k or a traditional IRA, you can reduce your taxable income and also save for the future. If you are self-employed and contribute to a SEP IRA, SEP IRA, you can contribute up to 25% of your net self-employment income, up to $56,000 for 2019. Okay? Look at your retirement. Put some money away for your retirement. Spend your FSA. You know what that is? If you have a flexible spending account and have money left, get caught up on your doctor's visits. While the old use it or lose it rule may not still apply, you may only be able to carry over $500 worth of unused money left in your 2019 FSA account at the end of the year. Your plan may also limit the amount of time you are able to use your funds to 2.5 months after the end of the plan year. The other issue is buy low, sell high. Chances are you have a few investments in your portfolio that have gone down in value. But did you know you can recognize your losses and use them to offset investment winners? To do this, you need to sell the losing investments and offset your losses against your gains recognized. If your losses exceed your gains, you can apply $3,000 of that against your regular income. Any extra will be passed to the next year, or will float over to the next year. The other thing is make your W-4 withholding allowance adjustments. Remember, I told you to do that. If you did not have the tax outcome you were expecting in 2018 due to tax law changes or experienced life changes like having a baby or getting a pay increase or a new job, now is a good time to adjust the amount of taxes withheld from your paycheck by adjusting your withholding on your W-4 and refiling the form with your employer in your payroll or HR department. Okay? You need to talk to your accountant about that. That's why I say, you know what, you guys are paying big bucks for your tax practitioners, but you're not using them throughout the year. Ask them questions. Ask them questions, I'm telling you. The other issue is be aware of the other dependent credit, or the ODC. Do you support your parents or even grandparents? How about another loved one? If that happens to be you and they qualify for a non-child dependent, then make sure to take advantage of the new other dependent credit worth up to $500. Which can reduce the taxes you owe dollar for dollar by $500. The other issue is gather receipts related to your home property taxes or large purchases. Do you pay home property taxes, pay state taxes, or did you make a large purchase and pay a lot of sales tax? You can still deduct the amount of state and local property and income or sales taxes up to $10,000. In the past, these taxes have generally been fully tax deductible. Don't worry about knowing these tax rules because you need to rely upon your tax practitioner. Ask them about these questions. Ask them. You have all these available tax credits that you can take, and you can apply them to your 2019, but you need to be proactive and start doing some tax planning. You only have a few more weeks in December. So you need to start getting on the phone and calling your tax practitioner. That's what you need to do. Now, I'm giving you some ideas here. You've got to take advantage of them for your 2019 tax return. And then you also need to start planning for 2020. And I want to tell you one other thing. If you're not sitting down with your husband or wife together and putting together a budget for 2020, expect to throw money away. Husbands and wives need to work, or your significant others need to work on putting together a budget. You need to know what your income is coming in, what all of your debt is that you have to pay out on a monthly basis, and all of your operating expenses such as electricity, your utilities, your car insurance, any taxes that you need to pay. You need to budget for that. And then see what your net income. If you have any net income, keep it in the bank. Build up $1,000 emergency fund. In case you get a flat tire, you need to change some tires, or you need to go to the emergency room, make sure that you build up your emergency fund. Credit cards are not your emergency fund. They should never be. No one's getting rich by having credit cards. You're getting poorer. Pay off that debt. If you've got credit card debt, pay it off. If you have a car debt, pay it off. That should be in your budget. So you've got two responsibilities now before the end of 2019. Sit down and look at your taxes and where you stand right now for 2019. Then you need to put together your budget and your income and spending for 2020. And begin putting together a $1,000 or more emergency fund for those things that pop up and bite you. Do it. If you need help, send me a text. It's 818-252-5682, 818-252-5682. I'll try and answer your questions as best that I can. So be proactive. Everyone needs to be thinking about, you know what, we all, in the Bible, it always talks about being a good steward. In other words, knowing how to control your finances and manage your finances. Knowing that debt is not good. In taxation, we need to pay the right amount of taxes, but not over and not under. I want you to really think about this for 2019 and 2020. You still got a little bit more time in 2020. Get your phone out, call your tax practitioner, and talk to them. This is Mike Lodge for the WBT. I will be with you again tomorrow, and we'll talk more about business and taxes. Have a great day, everybody.
Thank you for listening to the WBT with Michael Lodge. Join us again tomorrow as we explore more about business and taxes. Follow us on iHeartRadio and go to our podcast website, at www.wbtpod.com and listen to all of our podcasts and read our blogs.
This podcast has been produced by Michael Lodge, fully focused on content.